I actually think there's a sea change with Bitcoin, and here's something that I want to discuss, which I think is going to, if you're sitting and your net worth is under $36 million, this is going to directly affect you because I think you're going to have your wealth skinned away from you. You are going to be skinned alive if your wealth is under $36 million. And I've only just thought about this, so it's something that is a new thought for me. It's something that I need to discuss with people who are in that sort of wealth bracket. Let's say $1 million to $36 million. Basically, anyone under $36 million. I think you are going to have your wealth taken from you, and I think you're going to miss the Bitcoin train, and I think it's designed for you to miss the Bitcoin train. Here's something I learned quite recently, which is in ultra high net worth portfolios, that's basically anyone above $36 million of wealth, considered ultra high net worth. Around 46% of the portfolio is in alternative assets. And I would have never thought that. That was something that never crossed my mind. It was like someone who's ultra high net worth, of course they got equities, of course they got real estate, of course they got all these, traditional assets. But the truth is, 46% of their wealth is in alternative assets. So what that tells me is that ultra high net worths are more open to something like Bitcoin than the high net worth, right? So again, high net worth is under $36 million, ultra high net worth is above $36 million. And it's very important to understand this, which is why I want you to subscribe to the channel so that we can have these conversations. You can start seeing how the game is being played. Because when you think about it, it's like, well, now that these ETFs are approved, who are the people that are being called to invest in these ETFs? It's not the sub 36 mil. I got friends, that are in that range that are not receiving any phone calls at all. And I've got friends who are above the $36 million range who are being called by their advisors. That's what made me go and look at what's going on here. And I've come to a couple of theories as to why I think that this is the case and why Bitcoin is going to be used to protect the ultra wealthy, and the wealthy are going to be skinned alive if you don't get your shit together individually for what's going on here. So when you look at how wealth is controlled and owned and distributed when it comes to the under $36 million, so the wealthy range, you realize that the majority of portfolios are in equities and real estate, majority real estate. Then when you go above that, it's equities, and the more you go above that, it's going to be these alternative investments that are out here. So what that tells me is that the ultra wealthy have realized that the market for trad assets like equities and real estate is so saturated that they've had to pursue higher risk opportunities in order to generate the returns that they need on the scalable level that they need them with that amount of money. And so really, the alternative investments are private equity, private lending, it's all like art, all this other stuff that's considered risque to people. But the real factor is this: they're investing in the private equity side, and then they're dumping the exit liquidity for the ultra wealthy is basically the wealthy, and then the wealthy are holding those companies in their portfolios while the ultra wealthy are out of those markets. So it makes sense what's going on here, because I think we've been looking at it the wrong way. I think that the ultra wealthy at this point, it makes sense why Blackrock was studying Bitcoin since 2017, because they deal with the ultra wealthy, and the ultra wealthy are more interested in Bitcoin than we think. The ultra wealthy are more interested in understanding how to maintain and grow their wealth than we think. So of course Blackrock has been studying this since 2017, while everyone else has been wondering when they're going to jump in. I actually think that as a percentage, you probably got Bitcoin as a percentage of people more exposed in the ultra wealthy category than in the wealthy category. And I think that that's terrifying, because if you're someone who's built a property portfolio, $5, $10, $15 million property portfolio, they're just going to leave you behind. And it makes sense, right? Because you own real estate. The majority of your property is real estate. It's not beachfront real estate. It's not prime real estate because that's too expensive. You own single family homes. It's trying to disturb me right now. You own single family homes, and what that means is you are redistributable. The ultra wealthy are not redistributable because the type of properties that they own, the price properties that they own, nobody can afford them. But you, with a $5, $10, $15 million portfolio, we need to dump your properties onto the market because the peasants need somewhere to live. So it makes complete sense to me as soon as let me turn this off. It makes complete, I don't know what it is. People have radars, right? Like, oh, British HODL's recording a video. Let me text him. Unstoppable, in an unstoppable manner. So anyway, I think that there is a lot to think about here, which a lot of people are missing. I think ultra high net worth is the game. I think they're the ones that are buying Bitcoin. I think the wealthy are going to be left behind, and I think the wealthy are going to be skinned alive to redistribute their real estate riches. God damn it, I don't even understand. Look, I got 7 voice notes from this guy, right? They're going to redistribute their real estate riches and give the peasants somewhere to live. It is going to be the only wealth tax that is applicable in the United States. You've got to let the ultra wealthy fly because they're already in assets that you can't really control. So what's the only asset you can control and get political points for? It's real estate. It's livable, single family home real estate. And so you're gonna get screwed. It's as simple as that. I'm more emboldened than ever in my understanding that the Bitcoin, adoption curve here is just gonna skip completely over the wealthy, go straight to the ultra high net worth above 36 mil. They're gonna get into it. It's going to then explode their wealth. They're going to redistribute real estate riches because the wealthy have been told Bitcoin's too risky and they're not being told about it. And if you're under $36 million of net worth, you need to start grabbing a hold of your sense of pride and responsibility for the amount of wealth that you have and start getting to an appropriate amount of Bitcoin before you end up losing it all because of high interest rates, slowing property price growth, etc., etc. So, yeah, this is an interesting thing to think about, and it's something that I've learned very recently. So I'm thinking about it more and more. But I wanted to get this out there because it sort of lines up with the conversations that I've been having with people who have advisors, right? The people with $5 to $10 million that have advisors haven't even heard about Bitcoin ETFs yet. Someone I spoke to that's worth over $70 million definitely had a phone call. So I think the wealthy are going to be the ones where you can tax, in essence, and start helping the poor. And the ultra high net worth, they're just going to get richer and richer. And it makes sense for increasing the gap between the poor and the ultra high net worth, and you've got to make a choice. Do you want to be poor or do you want to be really ultra high net worth? Because anywhere in that middle range, you are going to be taken advantage of. It's just very, very simple. And that's something you need to think about, right? So I wanted to put this out there because it just blew me away. I thought that what we were going to do is do this sort of bottom-up adoption. But really, no. There's been a few people who will be classed as lucky by Wall Street that got into Bitcoin early, and they've got a large amount of wealth now, and will have a large amount of wealth. But then after that, this middle generation, which owns a bunch of real estate, et cetera, businesses, blah, 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 just going to skip right over them, go straight to ultra high net worth, and start getting ultra high net worth into this. So if you don't want to remain poor for the rest of your life, then you need to secure some Bitcoin, because if you are in this under $36 million category, you are being forgotten about right now. It's as simple as that. Blackrock doesn't play with the wealthy category. It plays with the ultra high net worth category. And I should have seen this before, but I've only seen it now. And so now you're going to start seeing, you know, I don't even think they're going to tell anyone who's in that under $36 million category. I don't think they're going to even try. It's all ultra high net worth. It's all the people who have, you know, the majority of the capital. That middle range is just going to be skinned alive, which is why I'm saying please subscribe to the channel, help me get this message out there as quick as possible. And ultimately, there's always only 3 rules to Bitcoin. Step number 1, you buy Bitcoin. Step number 2, shut the fuck up. And step number 3, you get fabulously wealthy.